Thank you, Nirav. Good afternoon, everyone. I would like to welcome the management of BOSCH Limited and thank them for taking out time for this call. We have with us today Mr. Soumitra Bhattacharya, Managing Director, Mr. Jan Oliver Roll, Joint Managing Director and Chief Technical Officer, and Mr. S. Srinivasan, Chief Financial Officer and Executive Director. I would now hand over the call to Mr. Soumitra Bhattacharya for his opening remarks, to be followed by question and answer session. Over to you, sir.
Thank you very much, Mr. Jairaj, and good evening to everyone. So I would like to first start with hoping that you and your family are safe in these turbulent times. I would also like to give a small brief of the macroeconomic and the policy highlights of this quarter, which affects our business. According to IMF, the global economy is now projected to contract by about 4.4% in 2020. India's GDP contracted by 24% in Q1 in FY 2021. The economy faced its deepest contraction, which was the worst amongst the G20 countries, and IMF projects India's GDP to contract by approximately anywhere between 9 to 10% for FY 20/21. The Indian economy has been opening up rapidly since Q2 2020, and we are seeing a decrease in new cases in COVID in India, and almost all mobility and economic indicators across urban and rural areas have shown signs of steady recovery. While some of this revival in the auto sector can be attributed to the pent-up demand and the inventory build-up due to the festive season, a sustained recovery across all segments still needs to be seen. The government has passed some long-standing economic reforms that will drive growth in the medium term. However, fiscal push by the government, like GST reform for auto sector, could help in the long-term recovery. During the quarter, overall automotive market production declined by 6.2%, including two-wheeler segment. Heavy commercial segment declined by 39% due to sluggish demand, excess capacity, and lack of clarity on scrappage norms. The passenger car segment declined by only 3%. Demand is expected to rise during the festive season with preference to personal mobility. The tractor segment increased by 23%. The tractor segment continued its double-digit growth trend with a good monsoon, higher minimum support price MSP, and strong retail demand. The LCV declined by 9%. However, the LCV segment is recovering faster than expected due to e-commerce activities as also last-mile transportation, mainly intra-city. Two-wheeler segment declined by 5% during quarter, but in September 2020, it has also increased by around 15% compared to September 2019. Preference towards personal transportation coupled with channel filling ahead of the festive season is driving an improvement in the two-wheeler. I must add a word of caution for two-wheeler that festive season will be a defining moment. Among the other market segments, three-wheeler segment declined by 55%. All of us know due to COVID-19 precautions, shared mobility has been severely affected. However, in the cargo segment, it has shown a faster revival. Amidst this auto market performance, we will now look at the performance of our company for the quarter. Total revenue from operations at 24,792 million was an increase of 7.2% compared to the corresponding period of the previous year. The mobility business sector increased by 7.5%, which has performed better than the automotive market. Business beyond mobility recorded a decline of 4.6%. The reduction is on account of the decline of the business in solar and security technologies division, which are mainly product-driven. Within mobility solutions, powertrain system showed an increase of 6.7%, and two-wheeler business continued to witness a double-digit growth during the quarter. The domestic sales during this quarter increased by 7.2%, thereof mobility solutions by 9.6%, whereas business beyond mobility decreased by 4.9%. The material cost as a percentage of revenue from operations has increased to 59.4% in July-September 2020 as compared to 55.4% in July-September 2019. The increase is mainly due to unfavorable forex variations as also change in product mix. Similar trend is seen in the 6-month period ended. The employee cost has declined to 3,083 million for July-September 2020 from rupees 3,349 million in July-September 2019. The decline of 7.9% is mainly on account of transformation, restructuring projects, and other HR-related measures. Depreciation has marginally declined by 3.8% July-September 2020 against July-September 2019 due to the lower additions during the year. Other expenses for the quarter July-September is rupees 4,112 million as compared to 3,596 million for July-September, an increase of 40.4%, mainly due to COVID-related expenses, mobility solutions, and other provisions. Operating profit stood at 2,084 million for July-September 2020 as compared to 2,544 for July-September 2019. The other income has decreased from 1,015 million in quarter July-September 2020 from 1,675 in July-September 2019, majorly due to decline in interest income and mark-to-market gain on marketable securities. For quarter July to September 2020, the company posted a profit before tax of 3,086 million before exceptional item as compared to 4,213 million in July-September 2019, a decline of 27% approximately. As a percentage of revenue from operations, PBT stood at 12.4% in July-September 2020 as compared to 18.2% in July-September 2019. Continuing the journey on various structural changes to be fit for the future, Bosch Limited has further provided 4,000 million towards its investment in restructuring, reskilling and redeployment and other transformational projects. This has been disclosed as an exceptional item for the quarter ended September 30th, 2020. This is the second last tranche which is extended to the workforce for FY20/21. Loss before tax after exceptional items stood at rupees 914 million and loss after tax stands at 640 million. Some other highlights. Bosch Limited has also, in its investment arm, Robert Bosch Investment Netherlands, acquired 26% in Sun Mobility. This proves the commitment of our parent Robert Bosch in India's growth story while Bosch India navigates through turbulent times. With its COVID reach, Bosch is focused on enabling electrification with its four-pillar approach towards mobility, personalized, automated, connected and electrified. Bosch Limited is constantly evaluating opportunities in providing critical electromobility connected solutions to OEMs. With a focus on making mobility cleaner and convenient, Bosch Limited invests in startup Routomatic Nivata Systems Private Limited, a venture-funded enterprise based out of Bangalore, creating urban mobility innovations for corporate transportation. Through this investment, Bosch Limited expands its offerings from being an automotive systems and component manufacturer to a technology enabler in mobility lifecycle through its digital platforms. The Indian automotive market has witnessed a V-shaped recovery, with wholesale and production exceeding the 2019 levels for the month of September for the first time since onset of COVID. By the way, colleagues, I'd also like to tell you October has been actually for Indian automotive market, but also for Bosch, even better than September. Specific to the commercial vehicle segment, we foresee a strong ramp up in the upcoming 6 months, of course on a low base, mainly led by dealer inventory with BS6 vehicles and robust demand in LCV segment, led by recovery in the e-commerce segment. There's been a gradual pickup of vehicle sales in OEMs, which are stocking up for expected rise in demand during the festive season. Early reports suggest consumer sentiment is picking up. We expect some positive news for the year to come to an end. However, it will take considerable time for the market to reach the high of 2018-19. Under these challenging market environment, our short-term focus has been on cost containment, conservation of liquidity position, and a positive outlook for our cash reserves despite several transformation projects. Given the current market scenario and exceptional measures deployed by the company and the organization, we are cautiously optimistic of not just breaking even, but becoming positive for the financial year 2021. I would like to thank you for your contribution and your patient listening through the call, and I would now like to address your questions and queries.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, We will wait for a moment while the question queue assembles. Anyone who wishes to ask a question, you may press star and one. First question is from the line of Pramod Kumar from Goldman Sachs. Please go ahead.
Yeah, thanks a lot for the opportunity, sir. My first question hello, can you hear me?
Yes, Pramod, we can hear you.
Yeah, great. Thanks for that. My first question pertains to the exceptional items, sir. As in, it's been like 6 quarters now, and we've kind of written off 9.5% of the revenue over this period in exceptional. And just wanted to understand if you can just help us get a bit more granular color on the breakdown of the key items under this. So how much of this is related to employee separation or reskilling, and how much of this is basically impairment or write down of technologies which you don't think are going to be that valuable going forward. So if you can provide some more color on that, and also how long do you expect it to continue? Do you expect this to be a recurring phenomenon for the second half as well, or do you expect that we've seen probably we are almost at the verge of closing this exceptional streak, sir?
Thank you for the question, Pramod. So the exceptional item of 400 crores, I have already mentioned in my speech right now, will be followed by one more quarter for the fiscal year 20/21, and a marginal amount as compared to 400 crores. So the company has taken a very clear call by design for what we started as a transformation journey already 2 years ago under the 3R program of reskill, redeploy, and restructure. So it is for all these 3 items on our transformation journey. I had also mentioned, Pramod, last time that we have done it the BOSCH way, with 1,000 blue-collar workmen taking an early voluntary retirement amongst other expenses. For example, the company is going to spend a lot of money on complete digital fluency for the whole Bosch Group, but also Bosch Limited. We are also doing reskilling. So, bottom line, we are doing it the Bosch way. It is voluntary separation where it is a matter of restructuring. It is reskilling in a major way for new technologies, including digital, and it is also for redeployment. Finally, I would like to say, the company has upfront put it up, and while having done it, we have ensured that the packages are some of the best in the market, that there are future cash inflows for our colleagues who have taken it, and that we have maintained with ethics and values. Lastly, our cash reserves today stand stronger than pre-COVID, and currently they are around 6,600 crores. So we've taken care of our cash. We have put up this money. We've shown it as a cleared item. And while having done it, Pramod, this quarter, we have given a result of profit before tax, before exception item of 12.4% with a growth of 7.2. Does that give an answer?
Yeah, fair enough, sir. And second question pertains to the revenue and the margin profile. Because given the way the sequential improvement is happening on the industry level as product categories, is it fair to assume that the revenue growth and given the special value add on the BFC side, it should accelerate materially in the second half of the year? And in that context, if you could just explain what led to the sequential drop in gross margin, because we are down to 170 basis again quarter on quarter on the gross margin side. And just want to understand, is it due to because of higher import content on BS6, or is it initial hits from the commodity prices, which is kind of started to reflect in your numbers? Thank you.
So, Pramod, the matter on the future guidance that we do not talk, but I can only tell you one thing, that for the quarter, October to December, our company has a good order book. I mentioned to you already October was a very good month. In relation to profit before tax, I already told you at 12.4%. Our EBIT at 8.5% is a decent EBIT. Of course, we have forex fluctuations, but also the aspect of product mix, and especially in the powertrain. As we go along, our company has always believed in localization, so that will kick in at the right time. So in summary, I would say in a very turbulent year in the history of India and the world, this quarter the results have been pretty decent, and especially if you look at our cost management, that clearly is showing that we will reap very strong benefits from 21-22, but already the impacts on cost are already beginning to show.
Thanks a lot, sir, and best of luck. Thank you.
Thank you very much. Next question is from the line of Sonal Gupta from UBS. Please go ahead.
Yeah. Hi. Good evening, sir. Thanks for taking my question. Just continuing on the raw material costs and other expenses line items, I mean, are there any one-offs in this quarter in the sense like, because of, did we have to air freight or import more than expected or anything of that sort which is impacting the raw material costs being higher this quarter, or this is more just a function of product mix? Hello?
So are you there? So Mani sir, can you hear us?
Sorry, I had to unmute. So I mentioned already, Sonal, that our content per vehicle is going up in BS6. I also mentioned earlier that we have had very good acquisitions. But with BS6, when you have increased content per vehicle, you also have a certain amount of traded parts, the exhaust gas treatment or working with other partners. Plus, I mentioned to you that there is a FX impact. All of us know that FX impact was not too less. So if you take all that into account, where primarily FX impact and a mix impact, and especially on the powertrain system, and this company over time localizes. So you will see this for some time, but not for all times to come.
Right. And just on the FX side, is there a timing issue or in terms of like, do we have any pass-through arrangements with the OEMs, or we have to just negotiate as we next time?
We do have very good contracts defined, and these contracts are, we've been working on these sort of contracts from a long time. So I think the contracts always have to be fair and win-win, and we have that. And yes, there are certain elements on pass-through clauses, but I can't paint a single brush and just say because of that. I'll say first, we have good contracting mechanism. Second, we know that we have impacts on FX in India. And third, I told you the BS4 to BS6 is a very fundamental change for everyone, not just Bosch, and especially on the exhaust gas treatment. And always there'll be a variance between different customer to customer. So you can't generalize it.
Right.
We also have very clear compensation clauses.
Okay, sir. And that's very helpful. And just, in your opening comments, you mentioned that other expenses are up due to COVID-related expenses. Would you be able to quantify how much of that is because of COVID-related expenses?
I won't give the exact figure, but our company's first focus has been safety and hygiene for all the Bosch employees. And when I say employees, not just the permanent employees, but anyone who's related to Bosch who works for us. So we have spent a decent amount of money, and we will continue to focus on safety, where we do extensive testing, we do work from home, we do social distancing, we have improved our buses where we carry far higher loads. Example, we carry half the loads of the normal time. So bottom line is, yes, there has been some COVID expenses. We expect that to come down over time as COVID comes down. The good news is India is coming down on new cases. And Bosch has been an exemplary company on focusing on this part. So there are a couple of one-time items which will not be seen, but that happens time to time, the one-time items.
Okay, sir.
You will see improvement over time also on other expenses.
Okay, sir. That's very helpful. Thank you, sir. Thanks, sir.
Thank you very much. Next question is from the line of Shyam Sundar Sriram from Sundaram Mutual Fund. Please go ahead.
Yeah, hi sir. Am I audible? Good afternoon. This is Shyam Sundar Sriram from Sundaram Mutual Fund. Yeah, thanks for taking the question, sir. But firstly, from the revenue perspective, within powertrain, if you can give some insights on how the gasoline portfolio performed during the quarter vis-a-vis the diesel, and if you can. Hello.
Shyam, we do not give breakup between gasoline and diesel. I already mentioned
the percentage, sir. How relatively how it has performed? If you can give some perspective on that, yeah.
I couldn't understand, Shyam. Sorry, you'll have to repeat your question slowly. It's getting garbled.
Okay.
Can you repeat it, please, Shyam?
Yes, sir. Yes, sir. I was asking if you can give some perspective on the gasoline growth vis-a-vis the diesel portfolio year on year within the mobility. Yeah.
What I can tell you, Shyam, is the diesel versus gasoline share for the country. Yeah, but we don't give the breakup of individually here. So, first of all, what I mentioned to you that our mobility business, which is predominantly our powertrain business, that has improved in the quarter by 7.5%, which is, so I'm talking of the entire mobility sector business. And of course, in powertrain also it's around 7%. So it's equal to better than what the market happened, number one. Number two, we don't break it up between gasoline and diesel. I had mentioned to you that while the diesel share has been coming down for the whole country, and we are around at 22% diesel, when you look at fast cars, etc. in India, we have a good share in India on diesel on utility vehicles. So summary is our mobility division, mobility systems division is doing well. Our orders are full. We could hope for double-digit growth in the future. And when I say order book are full, I'm referring to this quarter, October to December. Then, of course, I also mentioned to you, festive season will determine not just for Bosch, but also for automotive sector, how we move forward. Okay. And I also mentioned to you, in the two-wheeler area, in mobility, we witnessed a strong double-digit during this quarter.
Understood, sir. Understood. That was helpful. Sir, and the other point is from the product, you did mention the product mix. I would presume that by that you mean the gasoline increase and transition to BS6. Is that what you mean by product mix impacts?
Product mix has multiple areas. It is a combination of aspect of manufactured and traded, which is a big impact, which for example, I gave you on BS6 has additional content per vehicle by us, and we are seeing that improvement, and that will help us over the years. I've mentioned to you we had got the highest acquisitions for BS6. Post-COVID, the numbers were 18,500 crores over a period of 5-6 years. So it has partly the element of gasoline diesel, but also has greatly the element of traded and manufactured. So multiple aspects in relation to product mix, but two important areas which I shared with you.
Understood, sir. And one other related point, sir, what is the level of localization we would have achieved for BS6 as we stand today? I mean, I understand we would localize over a period of 2 years, but as on today, for the BS6 products, maybe excluding the exhaust systems there, which is not our core area, what would be the level of localization, sir?
Look, localization levels differ from different families. So I can't give a generic statement. I can only tell you Bosch Limited, as also our Bosch group of companies, have a very systemic way of localization. We do not localize for localization. We see what the volumes are, requirements are, Because many times if you localize at too early a stage, it's counterproductive. So we look at the right timing for localization, and you have seen it in our conventional systems, which have very high levels of localization, to common rail systems, which has also pretty high levels. And now for the BS6 and for subsets of the BS6 like exhaust gas, we will also in a defined way do. So a very strong localization process is there for Bosch worldwide, but especially for India, where we are on our 67th year of Make in India. So you can understand it's not just whims and fancies, but a systemic process.
Sure, sir. Thank you. Just one last question. I'll stop here, sir. From restructuring expenses, over the last 6 quarters, we have incurred approximately 1,300 odd crores. What is the payback period as per Bosch's internal estimation for this for the expenses incurred so far? Any insights you can share on that, sir?
I couldn't understand.
What exceptional item?
Is it exceptional item?
Yes, sir. The restructuring expenses
we
have been doing over the last 6 quarters. What would be the payback period as per your estimation?
Around 5 to 6 years.
5 to 6 years. Okay. Understood.
We have mentioned that before also.
You're right. Thank you, sir. I'll fall back in the queue.
Thank you very much. Next participant is Nitin Arora from Axis Mutual Fund. Please go ahead.
So sorry, just dwelling more on this gross margin, as you explained the 2 reasons. But if you look at on a directional side, the way you were, guiding us on the call about your market share increase, about growing more than the industry directionally. But when we look at your gross margin, looks little surprisingly, came lower. Can you explain the reason? But directionally, if you look at, is it directionally will start looking up in the sense that this mix will go in our favor because of localization, or you think there is still, because this will remain for next 1 or 2 years, so gross margin will see a new normal towards these levels. So I understand you don't share in terms of guiding in terms of numbers, but direction would be really helpful. Thank you.
I will not give a guidance, but I'll give a broad answer in relation to what you asked. Look, your company has been very clearly focused on first, as always, very conservative accounting, very clean balance sheet and P&L, massive focus on free cash flow, which has resulted in our cash reserves being actually today higher than the pre-COVID levels, in spite of a 3-month greatly or partly shutdown in India. And we are already starting to see the impact on the cost, which will have a complete fruition in 2021. That's the first point. Second point, your company has also systematically focused on reshaping its core. Example, going from BS4 to BS6, we are perhaps one of the few organizations who held our customers from what I call from conception to SOP at the shortest time in the world. So providing holistic solutions. Third, the company is spending money in a focused manner on future technologies like Project House electrification, which is inside Bosch Limited, Project House mobility solutions, which is inside Bosch Limited. Your company is also focusing, while this, I talked to you on Sun Mobility, Bosch Limited will be partnering with Sun Mobility as a strategic partner, while the investment has come from Bosch Netherlands on example strategic investment there at 26%. And I shared with you now that we have gone into something like Routomatic at a 7.1% in relation to Nuveta private system, where we are hosting them on the mobility cloud platform. So we are focusing on changing our core, rejigging our adjacencies, and taking out certain speed boats while transforming and restructuring a company. So what we are not doing is trying to do this to ensure quarterly results look good. We are doing this for the future of the company, and I call it the midterm future, where you will see substantial changes happening in 21-22 and hopefully even better in 22-23. And 2021, already this quarter of October, November, I told you our order books are full. And I also told you we have come to a near end, the last tranche, which is marginal compared to what we put this one, will be on the next quarter. Does that answer your question?
That's helpful, sir. So just to put it in the context, as you said, the direction is more towards the improvement in the longer term. So is it something we should take away that FY 22-23, your aspiration is to reach to a double-digit or high double-digit margin which you used to do? Again, not asking a short term, just your answer of.
That's a very clear guidance question, and thank you for it. But
thank you very much.
You can add up that if we are doing this, should we do better or worse? But the other part is a very clear guidance question.
All right. I'll come back in the queue, and thank you for answering. Thanks a lot.
Thank you.
Thank you very much. Next participant is Dinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. My question pertains to the restructuring expenses which we are doing. So I believe that is yet to reflect in any reduction in our employee costs so far, right?
Not really, Dinesh. The restructuring, I told you in the previous quarter that we were completing, just at that time we were just completing of 1,000 headcount voluntary retirement with the Bosch ethos on ethics, caring, with us being in the top quartile of the country and with future cash flows. And all this is already starting to kick in. I told you you're going to get the full benefit from 21-22, but you're already starting to see the employee cost improvement already.
Okay, so second quarter had benefit or second quarter we completed that exercise? Sorry, I'm a bit confused on that.
Again, Dinesh, I mentioned already that this is the second last quarter of our provisioning. Now our actioning will depend on market situation, on because we are not doing restructuring just like that. We are doing it with a very clear game plan which we started already 2.5 years ago, which is transformation of the company on zero-based organization. So you have to look at the root cause. When you do a zero-based organization, you look at spans, layers, controls, and effectivity of people, thereby redeploy, thereby reskilling. So you have to please look at it not as headcount reduction, but look at it as strategic transformation. Keeping that in mind, we have been very open to show exceptional items in a very clear line. And you will see if I take out exceptional items, the profit both at EBIT and at PBT have been at acceptable levels under difficult circumstances.
Sure.
And we want to further improve it.
Right. And any sense of this 1,300 crore restructuring expenses so far? How much of that would be towards headcount reduction, VRS?
It's primarily, but it is not only. We have EVR, but and again I would say not headcount reduction. It's EVR mainly focused through transformation of the organizational setup under ZBO, zero-based organization. So we have to focus from that angle. But it is also reskilling. I just now told you that we are embarking on a digital fluency program for across Bosch Group in India, however massively focused on Bosch Limited, amongst many other areas. I also told you we are spending for monies for new transformation projects like electrification, mobility solutions and services, digitalization. So, and I also told you that we have done a very interesting strategic investment which Bosch Limited is upfronting with Sun Mobility. So it includes all these expenses.
Oh, okay. It includes investment in these areas as well. Got it. And
Not the investment on sustainability. I want to make that clear, because
in
that we have
terms of
already
reskilling
given.
for the newer areas as such.
Absolutely.
Right. And the second question pertains to, given the recovery which we have seen from lows of first quarter, does it anyway change your outlook, which you are expecting recovery to be more back-ended towards FY24-25 for the industry? Do we expect some change in that?
Dinesh, we can't have a generic answer to this question. I'll give you a very specific answer. Bosch India has different content per vehicle for different segments. Like we have a pretty good content, as you know, on tractors. Now, in the month of May, we looked at tractors that tractors would be at 4,50,000. Now, today we look at tractors to be anywhere between 8 lakh to 8.5 lakhs. Now, our units are running full in relation to customer demand, both on supply chain management to fill up the pipeline as well as sales. Now, if you look at heavy commercial vehicles, and by the way, tractors, the peak in 18-19 was 9 lakhs. Now, if you look at heavy commercial vehicles, the peak in 18-19 was 4,80,000. In the month of May, we looked at 1,10,000 will be the sale this year. But right now, we see it could be anywhere between 1,40,000, 1,50,000. Improvement on a low base. Now, if you look at light commercial vehicles, 6,70,000 was the peak in 18-19. But now we are looking at a recovery. In month of August, we looked at 2,70,000. Now in October, we are looking at 4 lakhs. So there we have in BS6 our content per vehicle improvement. Summary: the content per vehicle is improving Bosch, while it has a slight change adversely on product mix. And in 21-22, our content per vehicle for these areas will go up even more. So overall improvement, but with a little drag on the mix. And you can't paint it with one brush and one color. You have to look cars, LCV, HCV, tractors, two-wheelers, and three-wheelers.
Sure. And sir, you indicated about tractors and a few LCVs. On passenger vehicles also, I'm presuming that change would have happened, right? Upward revision would have happened.
You also see that 4.1 million was the peak in 18-19. In the month of August, we looked at maybe 2.2, 2.3 million pass cars coming in. But after that, we saw in 2 months' time 2.8 million. Now, of course, there's a mix between gasoline and diesel. The good news is diesel in the UV1, UV2 is pretty strong. And the positive news is some of the OEMs who had gone out are possibly coming in. So, bottom line is diesel is there to stay on a lower base. I told you already 22%. Diesel was at 48% 6 years ago. I don't think in the world you will see it, but not in India. And our presence in gasoline has moved up.
Sure. And so lastly, what's the CapEx plan for current financial year, FY21?
We had announced to you that this year for 2021 we have halved it. But the positive news is we have not reduced the CapEx on our vital expansion areas or our localization areas, or indeed the transformation of our Adugudi complex, which is becoming one of the smartest campuses in India, making it a tech center for the future. So it's a part of our transformation journey. And we have also focused on people, where very shortly you will see the announcement of a Bosch Learning Center. So combination is, while we have, normally Bosch India used to spend about 450 to 500 crores. This year we'll be in the region of about 230 to 250, 240 crores in that region.
Okay, sir. Great. Thanks and all the best.
Thank you very much. Ladies and gentlemen, anyone who wishes to ask a question, you may press star and 1. Next question is from the line of Bhaskar Bukrediwala from ASK Investment Managers. Please go ahead.
Yeah, thanks for taking the question, sir.
Just to dwell a little bit more on the margins, I understand you won't give the guidance, but as we understand.
Bhaskar, 1 minute. Bhaskar, your voice is garbled, please. So others have to be on mute and you have to speak a little slowly. Thank you.
Sure. Better now?
Better now.
Hello. Yeah. So just to dwell on the margins a bit more, and I understand you would not give specific guidance, but as we understand 4 things. One was some bit of COVID expenses, which was part of the other expenses, a bit of forex impact, which you mentioned, and then the segment-wise or the product mix, which impacted the gross margins. Now, as we move forward, I am assuming that the COVID part and the forex related should normalize, and as the segment mix also improves, along with your localization efforts, directionally the margins should normalize to your earlier levels. Is that a fair assumption and a directional-wise margin trajectory that we can look at?
Bhaskar, our CFO, Srinivasan will take that.
Sure.
It's right in the sense that as the top line picks up and also the content per vehicle is up and there is a certain benefit of localization that will come over the next 3 to 4 years and the benefit of transformation should also kick in. As our MD has already said, there is a certain payback period for the EVRs that we have done. So a combination of cost side transformation and the top line growth and the content per vehicle will have a trajectory towards margin improvement.
Right. And a question, sir, on the restructuring thing. The margin part was really helpful. On the restructuring thing, does this expense also, in terms of reskilling of employees, also means that your opportunity set in terms of doing what you are doing currently also expands, and that is where this expense is directed towards, where you are reskilling your employees towards newer areas of opportunity?
I mean, on one side, of course, we want to focus on digitization. So the world is becoming digital, and hence from our own perspective, both in terms of our process and the way we work, we have to become more digital. And secondly, we are also investing quite heavily in our mobility solutions business, which is also linked to what's happening which is also digital and more mobility rather than just being automotive, and what we are doing on electromobility side. So these are some of the 2 key businesses that we are incubating and growing.
Okay, sure. And any direction or guidance will you be able to give in terms of some of these new things? Which years would you be able to see some traction on the revenue side?
Look, Bhaskar, any professional management will do 2-3 things. First, be conservative in the accounting, we are. Second, focus on cash, we are doing it. Third, do a transformation and not look at quarter-to-quarter results, which we are doing. Now, if you do all this, you are bound to get the benefit, especially if you look at optimal. So we are launching speed ports. And when you launch speed ports, initially, you will do a front-ended some expenditure, but you'll get over-proportionate benefits at a later stage. So we are not trying to focus on quarterly results, I repeat. Yeah, we are trying to do what is right for the business.
Sure, sir, I understand. That's really good. Sure, I think that's very helpful. And all the best for the future.
Thank you very much. Next participant is Rajesh Ranganathan from Doric Capital. Please go ahead.
Thanks a lot for the opportunity. In your description about the gross margin impact, you had mentioned that one of the factors was the product mix, especially there was an increased traded content on the exhaust side. Is that something which we would internalize in the future, in the sense that it will no longer be traded in the future as volume picks up? Is that what we should understand? Or we would always be using that as a traded content?
Rajesh, it's a yes and a no. If there are certain things which we find is better to get done through our extended workbench or our external suppliers, we will continue doing that. If there are certain things which we find the mid and long run, certain imports work to the benefit, we will do that. But if there are certain areas which your company has been doing systematically and successfully on localization to improve the overall supply chain benefits, including duties, inventory, and improve cost, we will do that. So BS6 has just been launched, Rajesh. So we must understand that we have been the primary driver to support the industry to do the fastest change in the world. And Bosch India and especially Bosch Limited has participated to make it happen. So at this stage, you have to first focus on ensuring that this is done. The other things are very well planned and honed and will happen step by step in the manner that I explained.
Okay. And thanks for that clarification. And when we look at pricing, obviously it was a effort which you worked on partnership with your OEM clients, but it is also a time the industry is going through a lot of stress. So because of that, has there been any concession on pricing that you've given temporarily which may come off in the future? Because one would have expected margins to be a little bit better given that we are providing a unique solution in such a short period of time, which is something which you could have charged anything for.
Rajesh, it's a very interesting question. I'll try to keep it very simple. I'm sure many of you were in the Auto Expo. And I'm sure you saw many of the BS6 launches, and in most of them, Bosch is in. And I'm sure you also saw that BS6 was very attractively priced. And obviously, cost and pricing has some sense of semblance. Because in India, you need to create affordable solutions and affordable pricing. So the focus has to be how to expand the market, Rajesh, and not look at just pricing, both from the OEM but also the suppliers. So in Bosch Limited, we have tried first to give a very good holistic solution, and that's what makes us the USP and not just a component manufacturer. We are solutions provider. Many times people call us a component manufacturer. We are not. We are a solutions provider. Second, we have worked from the conception, including application, R&D, right up to the SOP on meeting the norms and better than the norms. Many of the Bosch solutions are far better than statutory norms. And third, our pricing ensures that the market pricing is met. And this is not just for Bosch, this is for the entire supply chain. It has to be done. So I will not get into whether our pricing should increase our EBIT or not. I will only say, does it help to penetrate the market working with the OEM from the conception, which is a different ball game as compared to selling components and becoming commoditized. Does that give you an answer?
Yes, partially. And finally from me, on the other participants also discussed this with you on the other expenses, and you've given reasons why it had increased. And of all the, it's a great result in many ways, but that particular item was a bit disappointing. Because if you look at other companies that have reported so far, both in the auto business and otherwise, they have managed to reduce other expenses compared to history. Is there, you had mentioned there's some one-off items in that. Can you try and maybe help us understand if that's the reason why we are seeing growth there?
I can tell you there are a couple of one-time items, Rajesh. We are not going to go into the details. And I can also tell you that you are going to consistently see an improvement on other expenses, along with personal cost. Does that answer?
Thank you so much, and best luck. Yes, it does. Thank you so much. Appreciate it.
Thank you very much. Next question is from the line of Annamalai Jayaraj. Please go ahead.
Sir, last quarter, generally the OEM demand and the OEMs are recovered much faster than expected. Was there any supplies we could not match on any sector on the OEM demand? And also, how was the aftermarket trend last quarter, sir?
So I'll come to the second question. Aftermarket is doing reasonably well because the fact is we are penetrating at the second level, not just at the dealer level. We are trying to look at the end sale point, including retail. We've also done very good work in our company on net working capital, including in aftermarket. So you will see, as I said, free cash flow improving consistently in this company. Currently, cash is king. Net working capital improvement, and also we are focusing on sales, not as a push sales, because you can have quarterly improvement in sales, but push or pull. So the push is getting converted into pull by generating demand. So that's one. Now, what was your first question?
No, whether, OEMs record much faster than expected. So
recovery.
Was there any supply side issues for any of the segments?
Yeah. So all our plants, especially on mobility, are full up. As I said, partly to meet the pent-up demand and partly to fill up the pipeline. We are the tier one to the OEM. So we will always see a bullwhip situation in terms of sale versus demand. There was a pent-up demand. The market had a demand and the supply chain was empty. So if you're filling up the supply chain, and in certain segments you're seeing that there is a end sale at the retail level also. So combination. And then there's a small word of caution. Let's see how Diwali moves. But overall, there's a very positive sentiment. And overall, for people like us, our order books are full, definitely in this quarter, with October as a very good month. The best month we've had for more than a year. Does that answer your question?
Yes, sir. Thanks, sir.
Thank you very much. Next question is from the line of Vijay from Ampersand Capital. Please go ahead.
Yeah. Hi, sir. My question is, you have been making all these investment with a view of breaking even or paying back in 4 to 5 years. So should we look at Bosch as a kind of company which will have IRR of somewhere around 15-16%? Is that how one should look at it?
I don't think, Vijay, we need to look at that way. We should look at what are we investing and is that investment optimal? So investment could be on CapEx, investment could be on the 3R program. So I told you on the 3R program, our payback is 5 years, max 6. I told you on our CapEx, we have reduced and optimized the CapEx, but still focusing on the essential, again for the future. And future, I mean always midterm. And we are at the end. If you do these, automatic enablement will happen on IRR, on EBIT. So we don't do it based on IRR, we do it based on business. In summary, I would say, your company is undergoing the biggest transformation it has ever had. From people, reskilling, current businesses which are the core, which are being massively focused but in a reinvented manner. And I gave you on BS4 to BS6. Very importantly, strengthening our adjacencies where we are investing money to be able to get the benefit in the midterm. And most importantly, on defined speed ports that we are launching And already 2 we told you, Sun Mobility, Niveta, Mobility Cloud Platform and Mobility Solutions. And as and when things happen on new projects, we'll let you know. And most of them are happening in BOSCH Limited.
Understood. If I can ask this question a little differently, BOSCH at one point of time was the most profitable auto ancillary company. So in 4-5 years down the line, how will we look at it? Will it be the most profitable? Will it be the fastest growing? Or, in terms of some kind of a financial metric, if we can just pin it down, like what kind of objectives it will deliver?
Vijay, this is a pure guidance question. Don't get me wrong. But I will give you an indirect answer. Now, if a company which got most of its money on diesel doesn't transform, what will happen to the company? It will make a lot of money, but after that, what will happen? So your company started transforming while sharpening itself on diesel and giving solutions for powertrain, diesel, gasoline, which are both affordable as well as meeting and exceeding emission norms, thereby keeping its USP on one hand. The second hand, your company started investing in new age and new tech businesses, for which you need a minimum gestation period. It doesn't happen for quarter to quarter. Third, it started transforming itself well before COVID on people-related matters. However, in the BOSCH way, which is, I would say, slightly exceptional. I will not comment on others, but I would say we do it in a different way. It's caring. It is taking care of not just the financials, which are very, very important, but the overall manner as a family. Now, when you do this with a game plan, you're bound to see the impact over time. We are not doing it, Vijay, for the financial analyst call. We are doing it to transform the company with a very clear game plan and in the not so distant future. Does that give you an answer?
Yes, sir. Thanks a lot for this.
Thank you very much. Next question is from the line of Priya Ranjan from Antique Stock Broking Limited. Please go ahead.
Yeah, thanks for taking the question. One is on when you look at the payback period for 4-5 years, so you have started this transformational journey from, say, last 2 years back. So should we take 2 years back as the entry point of looking at the 5-year payback period, or how should we look at it?
Vijay, when you look at 4-5 years, the answer is yes, it's 4-5 years. But I will not tell you now the year, which year, and what will it translate to EBIT. But do you see future improvements in the performance of the business? Answer is yes.
Mm-hmm. Yeah. And you have just highlighted, one of the questions you said that our content per vehicle will increase further even next year onwards. So any specific area where you want to highlight? Because broadly we presume that most of the content increase, particularly on the automotive side, has happened in the BS6, and there is hardly any new norms coming before 23 or so with CAFE and RD and all.
Vijay, you're right that when the content per vehicle improves, and that too in BS6, the real kickoff in BS6 will happen in the year 21-22. The BS6 is just starting its impact in terms of the customer. So you have to keep that in mind, that BS6, starting point is the second half of the fiscal year 2021, and the real impact in 21-22.
Yeah, and lastly, one common complaint from the industry side is that BOSCH has been pretty slow in ramp up or meeting the demand, whatever comes in at a very short notice. So you keep importing from, say, outside, and you don't plan it properly. So how do you react to that?
Vijay, in the last conference call, we had a situation where some of you asked about, are we gone into meeting customer requirements? The answer is yes. There has been in very short notice fall. Now, in case of local manufacturer or traded for anyone, on certain areas, on certain times, there will be always some time delay in terms of supply chain because of the global supply chain. So answer is generally in relation to supply chain, have we ramped up? Answer is yes. Specifically on one or two cases or few cases, if there is a situation, it can't be given with a yes and a no. It is linkage to what customers want, from where is it needed. If in very short notice there's an amazingly high increase, it will happen, but it can't happen overnight. So I think the generic answer is yes.
Mm-hmm.
And one particular case where we had a bit of a supply chain issue, and that too only for 1 month, that was very COVID related, including lockdowns and COVID situation, etc. And that last quarter itself I indicated we overcome that and are doing whatever is necessary to meet market demands.
Mm-hmm. And in terms of, say, when do you talk about localization? So localization also means that you have a 3-4 year payback period, or how do we look at localization when we decide about doing something on localization of particular areas?
Vijay, I can't give you an answer on the way you're asking the question. If you take localization of a conventional product, how and when we did it, that's different from how and when we did the common rail in the year 2002 to 2005, starting with, for example, a customer like Mahindra. Example, Scorpio. So they are totally different, and it is individual case by case. And I also gave you an example. Sometimes localization is not the right thing to do. Example, parts of EGT and so on and so forth. So we cannot paint it with one brush. So that would be a slightly unfair question.
Okay. Okay, thank you, sir. That's all.
I think that should be the last question, if I'm not wrong.
Yes, sir.
That's the last question for today. I will now hand the conference over to Mr. Annamalai Jayaraj for closing remarks.
We thank all the participants. We thank BOSCH management for taking time out for the call and providing us the opportunity to host the call. Have a good weekend.
Thank you very much.